The president abruptly, as you heard Becky Lynn saying, abruptly turning an about face on the tariffs on everyone except China. Now, China's up to 125% tariffs.
Mm-hmm.
So if you're an importer, now for you and I, that probably is not going to double the prices on the shelves. But if you're an importer, it literally doubles your prices.
Yeah.
Yeah, more than doubles your prices now if you've been importing goods from China. So where's that money coming from? China's not paying it. The importers pay the tariffs, not the exporter.
Mm-hmm.
The importer pays the tariffs. So then what happens to that? And then the president said, this is it I'm going to suspend him for 90 days.
For everybody except for China.
China, that is correct. Joining us right now is our Valley economist and president of Rounds Consulting, Jim Rounds. And Jim, thanks so much for being back on with us. It is, first of all, you're one of our favorite guests. Second of all, we learn something every time you're on here. This may seem like a reprieve, this 90 days anyway. But are we starting the clock and the next sword of Damocles hanging over us all of a sudden?
It's hard to tell. Guess who perfectly timed this 10% increase in the stock market that happened today?
I'm sure it's not
me.
someone.
I'm asking you if you knew, because it wasn't me. I was hoping it was
someone named
you.
Trump, right? Nobody named Trump timed this perfectly.
Man, it was shocking. But you know what I think a big deal is when if you remember, we were talking about before certainty and maybe signaling ahead of time so the markets can adjust before they even open the next day. That's what was happening when we first went into these tariffs. It was, we're going to implement them, but let's put them off a month. Let's put them off another month. And then we had these just extreme tariff proposals all of a sudden, and the world went into shock. And now we're kind of back to pulling back again, except for China. It's kind of a more casual, maybe we're going to do this. That was enough to get a lot of money off the sideline back into the stock market. So I feel like people are putting a lot of faith that there's a lot of good strategizing going on related to these discussions. Just having experience with the government in the past, I'd like to think that, but my knowledge base says it's not likely. But we'll have to see where it goes. The putting off the kind of tit for tat tariffs for a while, that may just have to do with the fact that they got a lot on their plate. They got to figure out how they're going to deal with the smaller countries where it's not as big of a volume. How do you deal with our more friendly countries like Canada and Britain? And then how do you deal with countries like China longer term? Because this isn't just about tariffs with China. This is about protecting intellectual property rights and a bunch of things like that. And, with Mexico, it had to do with some of the drug trade too. With some of these big countries, it's getting into some issues that might be kind of hard to fix over, a month or two.
Jim, what can we expect over the next 3 months? We'd heard for the last few weeks, short-term pain, long-term gain. Are we still in short-term pain, or was that a one-week event and we're now into long-term gain off of the 2,000-plus point gain that we saw today on Wall Street?
It's hard to say. We're still in guessing mode. I think last time I was on, I said my threshold for getting back into the stock market was
36,000.
20%. Yeah, and we didn't quite get there, and so I missed out on this 3,000 increase. But it was close. I mean, it was at least I had a shot. But it's hard to predict this because there's so much uncertainty. So I'm thinking that the pain's going to be a little bit longer, and remember, what's happening in the economy isn't just the tariffs. It's the huge cutbacks in spending after we had massive increases in spending for a while, and it's a slowing overall economy as well. So we might see a pinch on consumers beyond just the normal tariff issues. But the tariff issues worry me quite a bit because prices didn't come down from the last time we had high inflation. We're still paying higher prices, and now we're going to add to it again. Maybe I wouldn't be surprised if we had another 10% inflation if this thing played out for a while, and that would just be devastating to the economy.
So are you still predicting more inflation beyond what we would have had none of this ever happened?
Yeah, well, we're all going to be paying more for all these different items where the tariffs are being imposed. Like you mentioned, it's the residents of the country that impose the tariffs that end up paying more. So it's kind of a backdoor sales tax increase and for the government to collect extra revenue that way. But I don't know. The fact that the stock market recovered, it still has a ways to go, but the fact that we had a 3,000 point jump in the Dow, that is crazy. That means a lot of people feel like maybe there is some significant negotiation going on and it isn't totally random, because I thought this was going to take a full 4 years for the president to work all this stuff out, and I still feel like it will, related to countries like China and some others, but they may know what they're doing. It's just so hard to know.
Jim Rounds, Valley economist, president of Rounds Consulting. Jim, what does it mean from an economic standpoint that our president can throw down with global tariffs, wipe 10% of the stock market away in a couple days, or he can come out a few days later and say, just kidding, it's time for a pause, and have it all come roaring back? Does that trouble you? Does that give you any degree of confidence that this can wildly swing either way? How should I look at that as an average American?
You know, the average American or even an economist, what worries me is, years ago, you used to be able to look at, how's a company performing? Have they been productive? Have they introduced new products? Should the prices go up? Now, there's a lot of speculation. We're speculating on the speculators, and it's a little bit different. So we're going to see more volatility. But there's also a difference in the scale. 20 years ago, if we were talking about an 800-point decline in the Dow, everybody would be freaking out. Now it would just be Tuesday. So it's a little bit different than it used to be. But the fact that this can happen worries me. But I guess the big risk here is the uncertainty that you guys talk about all the time. When people, investors, businesses aren't sure what's going to happen, you don't do more stuff. You pull back and you wait and see what happens. That could be a real problem if people pull back on spending and businesses pull back on investing.
Jim Rounds, our Valley economist and president of Rounds Consulting. One last one real quick, Jim. We saw this happen the last time we got close to tariffs with other countries, and then we backed off. And that is that some companies started to stockpile in advance of the tariffs. And then all of a sudden there were like these sales. My father was saying, I don't know why bananas are so cheap all of a sudden. I went to Costco and they were trying to get rid. I said, well, he says, I don't know. They must be getting rid of bananas in Colombia or something. And I said, it's because of the tariffs. They were stockpiling these
Run
things.
on potassium.
That's exactly right. I got a story this morning that Apple was scrambling to get iPhones stateside in order to beat the tariffs. Is there a possibility we actually start seeing some items, some products that we have some big sales on here in the immediate future because of this whole tango?
Yeah, possibly. I was reading an article about how the Switch 2, the Nintendo system, how the pre-orders got canceled basically because they got to figure out what to do. Well, I got my contract with my cell phone coming up this next month, and where I can trade it in and I do another contract, and then I get upgrade to a free cell phone. I kind of wish that it was already. I'm not 100% sure that maybe Verizon isn't going to add another couple $100 onto that. So I'm even thinking about the timing on these things. When you don't know, you try to protect your money and you're a little bit more cautious. And I mean, there's some things that we can control and some things we can't control. And we got to focus on the things that we can control. And what we can't, though, is we have a president that wants to help the U.S. economy, is taking action in the short term that may be hurting it. But in the end, very well could be helping if everything goes our way, or it could just be a horrific, a little bit of a game, and we end up having a terrible recession. I mean, I really want this to work out because, you don't want the entire country to be in a severe recession for a long time. But that uncertainty, almost everything that we talk about, it gets back to that uncertainty, doesn't it?
Yeah, absolutely.
That was one of the most rosy, terrifying statements I think you've ever made, Jim. Thank you for that. Jim Rounds, Valley economist and president of Rounds Consulting. Thank you for leaving us on that note.
Thanks for watching The Chris and Joe Show. Click to see more from Chris and Joe, and tap the button in the middle to subscribe to KTAR News.